Hello traders, Cory Mitchell here with FX at the Street. Going to look at the US dollar CAD. I find it very interesting because it plays into a couple of the strategies we talk about on the website. The price structure strategy, as well as something I don't talk about as often, but it does tie into the price structure strategy, and that is supply and demand. Supply and demand, when we have a very sharp turn in the price will often come back and retest that area, and not always, but quite often gets rejected there. So here was, starting from this side of the chart, we had a peak, price gets sharply rejected off of it. It does not come back to retest that area. When it finally does, it marginally takes it out. We have a little consolidation here, especially if you drop down to a 30-minute or 15-minute chart, you'd see it, and then a sharp sell-off again. Then at the bottom here, we have a sharp reversal off this level. We do have a little long wick candle there. It does come back to retest a little bit, but not the low. And once again, price comes back to retest that low, marginally drops below it, and we have the reversal. That happens multiple times here. And again, even this level, if we draw this across, these levels just marginally drop below. We have the consolidation and the reversal. This level, price comes up to test these major highs. Same thing happens. We get the sharp reversal off of it. A little retest there, and then the sell-off. Now we could draw these on several different areas. Here, for example. And we do get a little consolidation here, and then a pop higher, but that one fails to go anywhere. So this is still our main one of interest. These would be secondary types because they're in between the highs and the lows. Again, here's another little one. Sharp reversal there. Pops up, comes back to retest, rejected off of it. At this point here, we have this area. Price comes back to retest, gets rejected again, and it marginally creeps higher each time it comes back to retest. The nice thing about waiting for the actual reversal, waiting for a consolidation like what we see here and then a reversal, is that when the price just blows through it, you're not even considering a trade. So here we had this level, price moves aggressively off of it. We do have levels below which are more important to us, but if the price did come back and stall here and bounce, that would be a potential trade, but it doesn't. It just plummets right through. So now we're into this next area. And the point is to look for these types of areas because, as you can see, over the last several weeks, this would have been, or going back about a month, would have been very profitable to just trade these bounces. And a lot of times you wouldn't have had to hold these trades for very long. 1 day, 2 days, maybe 3 days on the high end, and you could have captured a huge chunk of this range. Often it occurs within 1 day. You could basically trade these as a day trade. This one captured the bulk within the day. This one, the bulk within the day. This move up, the bulk within the day. This one, a little bit choppy. Next day, almost the entire move occurs between the London and US session. I have the London and US sessions up here. London is yellow, the overlap is green, and this grayish blue is just when the US is open. So it does tell you when the trades are occurring. Recently, the really good opportunities have occurred. These major sell-off points have occurred during the London session. And when you think about it, that makes sense. There's probably not a huge amount. Most of the traders trading the US dollar CAD are based in Canada and the US. So you get the false breakout during the London ahead of the US session, and then you get the actual sell-off during the US and Canadian sessions. So you're getting a lot of these false breakouts during the London session. Occasionally you get them during the US session as well. But just something to pay attention to right now is that the London session is causing the reversals. That's not always the case. You just want to maybe note the tendencies so that you're aware of these things. And earlier in the late last month, they were occurring more in the US session. We had these reversal points. This one occurred during London. This one during the US. This one during the US session. This one not during any period. You would have had to get into it later on in the London. But just something to be aware of, how you can tie these levels in where you have really sharp reversals off a level, and watching for the price to come back and retest it. You'll see that the pairs will often do it. Here's an example of one, sharp reversal lower, comes back, retest. In this case, it fails to move lower, goes right back up, and then you have a breakout higher. This one comes back to retest, nice long wick, and then a move up to the upside. So I would have told you to get long. And so a lot of opportunities in this pair. You could have been trading it for the last month, taking advantage of these opportunities. So I just wanted to bring it to your attention to look for these types of patterns when they're there, because it could have been a very lucrative time had you just noticed these supply and demand areas, and that the price was just basically creeping above the former highs, creeping below the lows, and then reversing. So a lot of people get frustrated when that happens. They're trying to buy here, and then they get stopped out. They're trying to buy here, oh, they get stopped out. But really, by waiting for the price to enter those areas and then the reversal, you're going to save yourself a lot of that frustration, that because you're going to avoid the false breakout to begin with, because you're entering basically on it or just after it's occurred. Whereas if you're always trying to think, trying to get in too early, then you're probably going to get stuck in those false breakouts. And then you got to hold through these sometimes like pretty big moves. If you bought here and had to put your stop loss below, you'd have to hold through a 15-20 pip drawdown before you actually got the reversal. And you never know if that's actually going to turn around or not. So once you see that the price has gone and then comes back, you can view these as shorter term trades, and then just wait for these areas where the price has had a false breakout, and then wait for the turn, because it's happened a lot in this pair. And once you start to notice those tendencies, you can take advantage of them. So something else, something to look at, something to keep in mind. And until next time, happy trading.